Okay, thank you for joining the director's cut for those who are online and in the room. Just a reminder that we do have the Q&A open. And so if you have any questions, feel free to type those in there. Just a couple of notes regarding where the director's cut is currently located and how to get to that. We do have a server down here at the oil and gas division. So our oil and gas, our kind of legacy oil and gas page isn't functioning right at the moment. But if you go to just dmr.nd.gov, don't add anything behind that, just dmr.nd.gov. It will take you to our landing page where you can get to the director's cut under the oil and gas division there and access that file, as well as links to watch the director's cut back. If anyone has any questions or issues related to that, please email oilandgasinfo@nd.gov. I think that's the only housekeeping that I have, and I'll pass it over to Lynn for production.
Thanks, Katie. Are the daily activity reports available there?
Thank you. Yes, the daily activity reports are also being posted at dmr.nd.gov. Again, there's an oil and gas tab on that page that they can go down and click on daily activity report. And the reports for the month of May are all in that location currently. So, and those are updated daily, of course.
Okay, great. Yeah. And the server failure was a hardware failure, a pretty big one. And the new hardware required a lot of updates, so it's taking longer to install than anticipated. But we think early next week.
Correct. Yeah.
Yes.
We're hoping end of day Monday.
Yeah. All right. Well, thanks everyone for joining us for our May oil and gas update. We're looking at March production, and March was a very good month. We saw an almost 3% increase in crude oil production, 2% above revenue forecast. We saw 4.5 plus a little bit % increase in natural gas production. So we're back on a trend of increasing gas oil ratios. We had seen that prior to the winter months turn down, and so that seems to be a long-term factor that is back and pretty much confirms what we were anticipating and projecting going forward. Crude oil prices extremely strong. Today's price is almost $102 a barrel for North Dakota Light Sweet and $106 West Texas. So we're estimating about $104 a barrel for North Dakota crude prices. That's more than double revenue forecast. Revenue forecast was based on $50 oil, so that's 108% above that. So very strong crude oil prices, good production, and April is going to be a much more exciting report, as I can promise. We suffered 2 blizzards about a week apart in the month of April. We saw production in the first blizzard drop from about 1.1 million barrels a day to 750,000 a day. We recovered not quite back to 1 million barrels a day, and then the second blizzard came, and it really was heavily impactful on electrical power and infrastructure in the Bakken oil fields. I think on a single day basis, the low point was around 300,000 barrels a day. It took a week, or I guess within a little bit less than a week, we recovered to 700,000, and it's taken another week. We think we're back at about 1 million barrels a day. Some of the big problems were that every single natural gas processing plant in the Bakken infrastructure was down for various periods of time, anywhere from 9 hours to some of them well over a week. And so just this past week, our largest gas plant came on, and that's really enabled a lot of production to come back on. So we're back to 1 million barrels a day, maybe a little more. You know, all of the large operators reported enormous production losses, and of course that has led to the deployment of every workover rig available being out there trying to get wells back on production. So we're recovering, but April should be pretty exciting as we provide a few more details with regards to that. Rig count gradually increasing. Happy to report that today we're at 40 drilling rigs. We haven't seen that number since March of 2020. So 2 years and 2 months, basically, since we've seen 40 drilling rigs continuously operating in the Bakken and Three Forks oil patch. So that's really exciting news. The number of wells waiting on completions continues to drop gradually. We this week have 15 frac crews working, and we haven't seen that many frac crews since April of 2020. So over 2 years since we had that number of frac crews. Seems like workforce issues are the #1 barrier to adding drilling crews and frac crews, rigs, and frac fleets to the oil patch. It's taking around 2 months to train and deploy a drilling rig and crew, and pretty similar time frames for frac crews. So it's just very, very slowly coming back. But good news both on the frac crew and the drilling rig count. April completions was down from revenue forecast, about almost 20% down. Not a big surprise there with 2 blizzards. So half of April was, blizzards and no ability to deploy frac crews at all, so no completions. Pretty similar results for Fort Berthold Reservation. When you look at a nationwide look, you can see that crude oil inventories continue to be well below the 5-year average, and crude oil worldwide is now below 5-year averages. So price day to day, extremely volatile. I have a chart, I should have thrown it in, showing who all purchased crude oil from Russia in 2019, and the vast majority of that chart has downward arrows on it as people have embargoed or sanctioned Russian oil, and so we're seeing all of the supply lines disrupted. Where Russian crude oil used to go, it does no longer go, and where Russian crude oil did not go, which was China and India, it has begun to go. And so with all the disruption in supply lines and confusion, the discounting of Russian crude oil, the high Brent prices and high WTI prices, it's just really, really volatile from day to day. And once in a while, it'll dip below $100 a barrel, but it simply can't stay there. And of course, the market did not like the signal that it got this week or late last week of the cancellation of the offshore lease sales and the Alaskan lease sales. And so, we've got some information coming up on that with regards to North Dakota. That's really the only ongoing thing with the federal government. Before I go there, gas capture, great news, 95s almost all across the board. In fact, trust lands on Fort Berthold was the bright spot at 97% capture. And so I've highlighted the 4 oil fields that we're really focused on. And again, it's the same group: Big Bend, Deepwater Creek Bay, Twin Buttes, and Charleston. Had a meeting with one of the major midstreamers. They've got a couple of alternatives that they put out there for Twin Buttes, which is our lowest, and so fully anticipating that sometime in 2023 we're going to actually have gas capture online and running in Twin Buttes, and that's going to be a big positive for statewide gas capture. But industry is super focused on this and doing a great job. The only thing on the federal front is the ongoing saga of the BLM lease sales, and the development there is that North Dakota, see if I can find my underlining. Oh my, I've got so much stuff. So North Dakota last week filed a motion to complete the administrative record in the case. We felt like the information that BLM filed in the administrative record lacked a tremendous amount of information, and so we filed a motion with the court I believe last Friday. No, it was on May 9th. So was that Friday? Yeah, because it's Friday the 13th today.
Yep.
Okay, so no, that was Monday. Anyway, so because I got to calibrate according to Mother's Day. Thank you. That's the peg in the month of May. You got to always think of relative to Mother's Day. So that was filed. We're hoping that the court orders the BLM to complete the record. The missing information, a lot of it. So, for example, the RMPs or the resource management programs and the records of decision from Corps of Engineers and Forest Service weren't filed, along with information about why various quarterly lease sales were canceled, and why some of the tracks were chosen to be in this latest lease sale. So we're just a few days away, I think, from I think May 18th is the deadline for protests for the projected June sale. So we can't really say for a fact that sale is going to go forward. There may be protests on the parcels that were listed. There were 15 parcels listed, and so we have to get past May 18th before we can say for sure that sale is going to take place. So March, a very good month, kind of a return to normal. April, as abnormal almost as one can get, and so it'll be an exciting month to provide reports next month. Thank you.
Start with any questions in the room.
Sure. If somebody were to file a protest, what happens?
So the question was, if someone was to file a protest on one of the tracks that listed, what happens? And it gets pulled off of the list because there's not time to deal with it, and it gets reconsidered or reevaluated for the following quarter, typically. Occasionally, the protest is found not to be substantive, but generally, the BLM, Department of Interior, likes to have a well thought out response, and so it usually gets pulled and then listed for the next quarter.
And then I was going to ask about the slowly increasing number of rigs and frac crews. Do you attribute that just to the fact that as time goes on, more of those crews are able to be trained, or what would you attribute that to?
Yeah, so the report that we're getting, particularly from the drilling contractors, is that almost everyone moved their drilling rigs south to Texas and New Mexico. They picked up much more rapidly than we did following the pandemic, and so the iron itself moved south. One company in particular has a dozen rigs available in North Dakota, but it's taking them 2 months to hire and train a crew. In some cases, it takes 3 attempts before people actually show up and get through the training and manage to get deployed. So it's a workforce issue, very much so, and we're trying to address it through the career and technical education aspect, but that's going to take significant time to work that out. So on the frac crew side, there have not been any new frac fleets constructed since before the pandemic. So the iron that's out there is starting to show some wear and tear, some age, and at some point we're going to have to see capital deployed to bring that iron back on. It's interesting, I was reading an article today, and some of the large operators were saying, well, you know, we could bid up the price to hire frac crews, but all we would be doing is hiring them away from smaller companies that can't afford to pay as much. So there wouldn't be a gain in the number operating, in the number of wells completed, or really a more rapid rise in production. So it's very, very much workforce limited. There are just only so many that can be deployed and be added.
And do you recall, maybe back to like the start of 2022, how many frac crews we had operating around then?
We had 25 frac crews operating at the end of 2019.
Mhm.
So yeah, so we're still well short of that peak number. We had 55 drilling rigs, plus or minus, and 25 frac crews operating when we were kind of at that peak production.
I'm thinking though, like back to the start of this current year, were we down? We were at like 11 or so.
Back to the start of this year. Okay, thank you. Yeah, so we got as low as 1 during the pandemic.
Yeah.
We started the year, I think, at 10. Yeah, so 50% increase. That's significant, and they seem to be improving their efficiency. And so again, even the drilling companies are seeking out ways to gain 3 or 4 hours in drilling a well. We had an operator come in with a concept for an innovation that we're talking with them about. And so that's interesting. You know, back when it took 60 days to drill a well, 3 hours didn't matter. But now that it takes 10 days, 3 hours per well is a significant improvement in efficiency. So we'll continue to see little marginal tweaks like that.
Questions coming online. Do you expect the small gains in production that we saw this month to continue month after month? Or could it be a kind of consistent up and down as it has been?
No, great question. And so our anticipation is that once we get past load limits and once we get electrical power back to all the meters in Williams and Divide County, that we'll see these kind of month over month production increases. You know, the 10,000 barrel a day, 30,000 barrel a day production increases. But you know, April's going to be a really bad month, and May likely won't be great either, just because of the time required to repair the electrical distribution infrastructure, and we still have road restrictions on, and because of the wet conditions out there, those could go on for a while.
I know you mentioned we're back up to roughly 1 million barrels a day after the blizzards. Would you say, you know, are we 90% of the way back to, you know, what would be considered 100% pre-blizzard, or how close are we to that full recovery? Yeah.
So the question was about where are we in terms of normal, and I think that's a pretty good estimate, Amy. We're at about 90% of normal. So you know, one operator reported that the first blizzard took them from 75,000 barrels a day down to 15. They were back to 65, and the second blizzard took them down to 5. And they're still not quite back to 75. They're at about 70. So in that, you know, there's 10% or less of the wells that are still off.
I do have a question came in online. I'm not sure if you can address it or not, but Michael Anthony from KFYR is asking how, what do we know, I guess, about how gas prices are currently being affected? And then there's also a cap that's being considered for gas prices. It's a bit more of a consumer question, but is there anything there that you can comment on? Or
yeah, so gasoline prices are at record highs, and there is little to no relief in sight. As we pass through Memorial Day, driving is typically increases. Whether people will make the choice to not drive as much, it is likely. I suspect people's summer vacation plans are changing as a result of the high gasoline prices. But with the turmoil in the supply chain and everything having to change, as well as the limits that we have on how rapidly we can increase U.S. production and exports, there really is no relief in sight for this year. And so the high crude oil prices are sustaining the high gasoline prices, and we're going to see it in transportation costs of all of our goods and services, as well as what it costs to fly somewhere. And it's really going to show up everywhere in our consumer economy.
I have one other question on a different topic. The Corps of Engineers has paused the release of the draft EIS for Dakota access. Do you have any insight, any info as to when that might be released?
Yeah, the question was Corps of Engineers and DAPL EIS. Do I have some insight on the release date? And I do not. The pause is a mystery to us. They haven't shared with us, even though we're a cooperating agency. They have not shared with us what it was that led to that pause. So I don't have any information. Yeah.
All right, I think we'll go
All
for
right.
Justin.
Thanks.
Thank you so much.
Off right to slide 3 when we're ready.
Okay, are you ready?
Yeah, good afternoon, everyone. Justin Kringstead, Director of the North Dakota Pipeline Authority. I'll jump right into the most recent production numbers from neighboring states. Picked up another rig in the eastern Montana side of the place, so 2 active rigs on the Montana side of the border, so 40 in North Dakota, so we're at 42 in the U.S. Williston Basin, 0 in South Dakota. So these are meaningful numbers as we go forward, and what that's going to imply on production and activity levels here in the basin. So we'll keep a close eye on that. Slide 4, I added a new little addition to this graphic. Typically maybe getting too small to see here very well, but the changes month to month in oil and natural gas, and then also I put a trend on there and the updated information on gas oil ratios, so we can just kind of keep track of what's happening. We did see over the winter months a lull in the gas oil ratio growth, but as Lynn alluded to, we're back on that upward trend, and we expect that general trend to continue to be strong for many years to come. On the oil transportation side, some minor changes. We'll jump right to slide 6, Katie. Again, the first thing you'll notice, fairly steady between the pipe and rail between that February, March. Again, production, market conditions, everything was fairly steady. It's going to be real interesting to see how those rail numbers start to shape up as we move into March and April with the sanctions and everything that may be occurring as it relates to Russian barrels and where those were imported previously into the U.S. The one thing we'll quickly take a peek at, pricing again, strongest PAD 1, PAD 5. During that February-March timeframe, if you would have caught on the last graphic, that Brent WTI spread was quite strong. So there was some incentive potentially to see some more barrels moving out of North Dakota by rail car. But as we bop, it must be coming up. I'll touch on the current pricing here in a moment. Just on the overall crude by rail out of the region, again, right around that 120, 130,000 barrels per day estimated to be leaving the region. So it's been steady here the last several months. And as far as destinations, that's remained quite consistent as well. PAD 5, PAD 1, the 2 dominant locations. And then as the EIA starts to roll out their March data here in a few weeks, we'll see if we start to see any type of shifting volume and market destination wise as it relates to, again, those Russian barrels that may not be delivered to those areas, and how a barrel like North Dakota may be able to backfill that in some capacity at least. And this is what I was looking for on slide 10, that current snapshot of pricing. If you look at Brent WTI spread just over $1 before lunch today. So that has narrowed quite substantially, and then you'll notice premium pricing for LLS in the Gulf relative to WTI, and continued real strong pricing at that Clearbrook market, over $4 premium to WTI for barrels that are being marketed that direction, primarily on the Enbridge system heading east out of North Dakota. So that So all things have continued to stay very strong for North Dakota as far as netbacks and pricing. And I don't see anything in the real near term that's going to have any major shifts on that here in the state. Nothing real new on the imports exports. That's continued to stay relatively consistent. The export volumes remain near zero. Another real good month on gas capture. We'll bump to slide 13, 2 months in a row now at 5% flaring for the state. Back to back, that's the best back-to-back months we've seen in the state. Again, consistent on why it's happening. Again, 4% of the gas flaring from wells that are connected, and then just only 1 remaining percent of that gas being flared because it's stranded or not yet connected to a pipeline system. So again, I know the folks working on solving this are certainly going to stay diligent on it. I think there's a lot of targets that are even stronger than what we've been seeing, so that's going to be fun to watch in the coming months as companies continue to expand and make expansion plans, get wells connected, and our knowledge base on how these wells are performing, how regions of the state are performing, and what type of infrastructure is necessary. So that a lot of good things happening on the gas capture front. Wells being connected, nothing real notable here. It's just encouraging to see that new wells getting connected to gas gathering are consistent with new wells selling gas. This slide is noteworthy for sure. So the EIA here, their May outlook for their short-term energy outlook, north of $90. They're in, I believe, at $92, $93 as you move out even towards the late 2023 timeframe. So they have substantially bumped up their expectations for oil prices here in the U.S., considerably stronger than in previous months. And so when we look at that and what that means for confidence in the marketplace and folks and decisions as they round out the second half of this year and move into the budgets and planning for 2023, we should, if this were to continue to hold at this type of level, that's going to be a real strong environment for continued high activity and interest here in the state. On the gas capture front, on gas processing, again, what's going on behind the scenes, a number of companies looking at expansions. We know that their current plant fleet is not going to be adequate for long-term needs, so nothing public at this time of what that may look like. I will touch on here, I think this is as good a time of any, on May 1st, we had the deadline come for the 2 buckets, part of that natural gas grant program put under the Industrial Commission from the special session last fall. So there was essentially 2 paths, one for a $10 million component, which would deliver gas into Grand Forks County at a more near time frame, and there was a remaining $140 million that was targeting a pipeline system to go from western North Dakota to serve demand loads in the eastern part of North Dakota. So May 1st that came, we did receive 1 application for the Grand Forks component. That application was submitted by Viking Gas Transmission. You can see they do have a pipeline system in western Minnesota. They do currently serve that Grand Forks County with a 6-inch pipeline. And so that application, which is currently starting the review process, that was for a 14-mile, 12-inch line to provide incremental gas service into Grand Forks County. So again, that'll go through the review process, and then that review process will then go to the full Industrial Commission for a decision to be made on that front. So for the remaining $140 million, we're still working through what that might look like, whether or not we go to another grant, opening the grant round for applications to come back in with a further out date. I think there might be some interest in that, folks. The interest is certainly still there. I want to make that abundantly clear. The companies that we're looking at this are still very much interested in finding solutions that address both halves of the state, right? That we certainly, the challenge on the western side to get gas moved to key markets, that need has not gone away. The interest and the support and the desire for more gas service in the eastern portion of the state, that has not gone away. So companies are certainly still looking at those opportunities, but what those next steps might look like in the next several months, stay tuned. We'll see if we've got some more details to release relatively soon on that. As it relates to what was taking place in April, we saw some major shifts, and I'm actually going to go back to that map for a second. So as Lynn mentioned, during the most extreme parts of that last blizzard, April 22nd to April 24th was when things were most extreme. Almost all of the North Dakota natural gas plants down because of power or production or staffing or one reason or another, all those things coming together, that those plants were down. Certainly when those plants are down, that means that gas is not flowing into the transmission pipeline system. And so we saw a significant influx of Canadian gas coming down northern border. That is what really helped keep the Midwest supplied with gas. Obviously, the Bakken is historically in recent years been the major supplier to northern border. When our production went down, having to backfill that with Canadian gas, keeping communities like Bismarck, keeping my furnace on at my house, right, and fueling it with Canadian gas as opposed to North Dakota gas during those extreme events. So that was my hats off to the men and women, the gas control and the field, making sure that those pipeline systems were operational during those extreme events, because it was challenging times for sure. And so we see that reflected. And then so I wanted to set that up for slide 18 here. Obviously, we saw a significant market shift during that time frame because of, again, Bakken gas going down, and then that need to bring Canadian gas in relatively quickly. It also puts a big exclamation point on the value and importance of interconnected pipeline systems, that having that redundancy, having that necessary supply connections to key areas, prove to be critical and allow us to continue to function as a society, keep businesses going, keep houses warm. So all good things that folks are able to manage. Gas quality on northern border continuing to stay well below that 1100 number. We'll see in the coming months and years here how that continues to play out. But again, this is something that I think is going to continue to need to be watched very closely, just given the scale and the expectations for future growth in the basin. So with that, I'd be glad to answer any questions.
Speaking of northern border, when that shift happened during the blizzard, I guess kind of a two-part question. Where in Canada does the gas tend to come from? And then was it like roughly the same volume that was flowing through as pre-blizzard, or do you know if the volume dropped much?
So the first part of the question, so where does that gas come from? There's, once you start going upstream, you go through the Port of Morgan, which is basically where northern border enters the U.S. Port of Morgan, you continue to go to the northwest, you start reaching the Alberta network. Empress is kind of the next hub up that way, but it is primarily Alberta, some British Columbian gas that comes down northern border. So was it equal volumes? No. And so northern border was short. It was not, I don't know if short is the right word. It was not leaving North Dakota full as it has in the past. And so there were a number of notices and different things that went out to shippers because of low inventory alerts and concerns. And so as those pipeline systems, as there's higher draw than gas coming in, the line pack and things start to reach levels that cause those alerts to go out to make sure that those pipelines have enough gas to stay operational, that there's enough pressure in those lines. So a lot of those things all taking place at the same time. And the other dynamic, I'll bump back to that kind of statewide map. Saw record volumes coming in actually from Canadian flows in the Red River Valley coming across WBI's Cheyenne or their valley expansion. So if you look at that map from Fargo, goes up to connects with the Viking pipeline. Typically, the direction of flow there on most days is going out of North Dakota, connecting to Viking. We saw, again, record numbers of deliveries coming off of Viking and then back feeding into WBI through the Red River Valley there as well. So we're getting Canadian gas coming from border, Canadian gas coming in through the Red River Valley off of Viking, and then other gas coming from the Rockies as well to try and keep the systems as close to normal as possible.
In Alberta, is gas produced in like the tar sands region, or is it a separate part of Alberta?
So the oil sands area, that is separate. So that's not where the gas, further west, the Montney, the Duvernay, both on the Alberta, the British Columbia side, that's where that's coming from. Typically associated gas, some wet gas, some dry gas zones. So.
And then do you know, since things have come back online in the Bakken since the blizzards, have we seen it switch now so that more Bakken gas is flowing through that pipeline and a lot less Canadian gases?
Correct. We're starting to return to that level of normal. And as I think Lynn has noted in his, correct me if I'm wrong, Lynn, record gas capture, right?
Yes.
Yeah, so record gas capture, so that means record amount of gas going through those plants and then needing a transmission solution after that. So we're, as we get out of this, hopefully in the next 2-3 weeks, back to quote unquote the new normal or back to normal, things will start to look more as expected on that balance between Canadian and Bakken.
And I've got one other blizzard question for you. Do you expect that with all the disruptions that happened in the course of the blizzard, especially with gas processing plants, how might that affect our gas capture numbers in April? Do you have any idea?
I don't. It's a great question for those on the line. You know, what do we expect in that April-May timeframe as it relates to gas capture? We've seen a lot of discipline by operators to maintain gas capture. So I'm not anticipating a major ramp up. There will likely be some, just as when these extreme events happen and outages, that does occur, but I'm not expecting the extreme ramp up that, you know, maybe 10 years ago would have occurred.
All right.
I got one last question.
Okay.
No,
for you. I figure I'll just end on another Dakota access question because that feels very on brand for me. I did not tune into Energy Transfer's latest earnings call, but usually they provide some sort of update on like what volumes are like on Dakota access. Do you have any sense what they're like these days?
Yeah, so not at full capacity. So if we assume that 750,000 barrels per day is full capacity, not at that level. So somewhere in that 600 to 650 type range.
So ramping up maybe a little bit compared to what it was.
You're correct. I mean, and production from the basin's been relatively flat the last number of months. So yeah.
All right. Well, thank you so much. And
Thank you.
that's everything. We'll see you guys next month.